All attendees are in listen-only mode.
Good evening, everyone, and welcome to the April edition of Digging into the BI. This is where members from the Better Investing community from Maryland and DC and Virginia look at the latest issue of Better Investing and look at some of the stocks that are in there. So there are the four stocks we're going to be looking at, and there are the four presenters that will be doing this. And let's just keep moving along and go to our next slide.
Yay! We made it.
We made it. Yes, we did. Anyway, so yes, we made it to 18 months, and in honor of that, we decided to put up a GIF, and the GIF is graphics interface format, and the person who invented it just passed away, so we figured we might as well celebrate with that to be able to help out. And anyway, that's just it. Let's go to our next slide. And just sort of a reminder that this is for our this is for educational purposes only. We do not recommend or suggest any particular stocks. We do this as volunteers, and we do this to sort of help out and all. And we just want to be able to give you some good ideas, but we do not recommend any of the resources that we go to or any of the stuff like that. You're on your own. So let's go to our next slide. Okay, so this is who we are. We're hold on. We're long-term investors. There's two links there. Hold on. And sorry about this. So we're long-term investment education organizations. The first link there will get us to stuff at Better Investing if you're not a member of Better Investing. And there's also a link there for stuff for getting a free gift, a 90 days a membership to be able to try it out. So that's just for people that aren't in BI, because there's not a requirement to be in Better Investing to be at this event. So let's go to our next slide. Just a little bit of help on going through GoToWebinar. If you're new to this, there you have those sort of an arrow over on the right-hand side. You can open and close that to do it. If you don't like where that is located, you can sort of grab it where the green circles are and sort of move that over to another location. That's certainly fine. You'll be muted during this particular time, but then afterwards, during question time, we can unmute you. And that's when you can raise your hand for questions. If you want to, during the course of this, you can type out your questions in the window there, and it may be easier to pull it out where the blue is and put in your question there. And we do have people in the back that are helping us out with that. Pretty straightforward. Let's go to our next slide. So again, most of you I know are regulars here, but if you are having trouble with your audio or you have trouble understanding GoToWebinar, there's a quick 4-minute video that someone put up on YouTube. Audio problems, we can hear each other, so it's probably on your end. It could be on your computer, or maybe you don't have it set up for the computer audio to take a look at it. And of course, don't forget the handouts. The thing is, we couldn't get the SSGs up there tonight, so any of the people that are at the end of this will have our email addresses. Any of us have the completed SSGs, and we can share them with you. But please take down the slide deck that has all the presentations from all of us tonight. Let's go to our next slide. And again, just to be able to help you out, if you want to, there's you can make this stuff bigger by clicking where the zoom is. And sometimes things are a little bit, we go a little bit fast, and you can sort of see where the screenshot is, and your computer will take a quick picture of what's on your screen at the moment. But again, you do have the slide deck, but just another way to be able to do things. Next slide, please. Again, why are we doing this? Well, we're in the better investing community, and we want to be able to help people, especially those that don't know much about us. You can certainly, if you have some new people to your own club that are learning about stuff, bring them along. This is a great place to learn. We're sort of focused on beginners, maybe people that are uncertain of their own judgment, but heck, even if you're a veteran, you can always sort of learn from others and get some best practices. And it's a way to be able to sort of share the duties between our two chapters, the Maryland chapter and the DC regional chapter. And we do have our 3 model clubs, so you can hear what we're doing there. And we'll talk about that in a moment. And we always like to be able to promote the clubs that are in the Visit Club program. In fact, one of the presenters tonight, her club is in the Visit a Club program. So if you're in a club and you want to be able to promote it, help us do one of these presentations, and we'll let you be able to talk about your club. And just be part of our entire organization. And again, we're all volunteers. We do this for fun. Next slide, please. So in just over an hour, we're going to try to get 4 of these done. Our stock to study, our undervalued feature, as well as 2 more that have come from somewhere in either the BI website or the magazine, hence the term digging into the BI. Those are some at the bottom. You'll see some of the places that are different ideas to find it. People are always looking for new stock ideas, and there's a good place to find them. Next slide, please. All right, just to be able to find these announcements before they come on in, you'll see that this one, both Nike and Pioneer Natural Resources were announced back on January 31st, and they already have the next 2 months that are up there. So if you want to, if you go to Home and About Us and News Releases, you can see this stuff when it comes on in. And if you see up at the top where it has that blue underline, that's a hyperlink. So in your handouts, you can be able to click on that and it'll go directly to that site if you're whether you're a BI member or not, and you'll be able to see the stocks that we're looking at coming up. Next slide, please. And don't miss out on any future announcements. Make sure to sign up under My Accounts when you're signed in as a member, or if you're taking the 90-day free trial. And from that, you can be able to get information from your local chapter where the sort of grayish arrow is at the bottom, and that where the arrow is pointing just above that. That's where you can get it. If you're in the Maryland chapter, you get the Maryland news, and if you're in the DC regional, you can get theirs. But before you click that save button down there, why don't you go on up and where that yellow is highlighted? That's a weekly newsletter. And if we go to the next slide, we can talk about what you get with that. This is their weekly newsletter. It comes on out just for members from headquarters outside Detroit. It's usually the close of business on Thursday, and they give you all this great information on what's coming on up. They have a really nice adding judgment series that you can be able to share and do with that. And if you can't make it, you can always go to the video learning library and it will stay there. I have an arrow pointing down to stock ideas. They have these stock screens that they do sort of once every other, probably once every other week. And this one, they have one on a growth screens for small and medium-sized companies, and there were 25 of them there. So if you're looking for stock ideas, click on that one if you're having trouble finding small and medium companies. There were some interesting ones in there. Next slide. And again, we're both up on Facebook. I didn't get stuff up on Facebook for this month, so that's my fault. But you don't have to be a BI member, and it's a great way to be able to stay connected with us and share with some like-minded friends that aren't in our community yet. Next slide. So, Cheryl, why don't you tell us about DC Chapters Book Club?
Hi. On the third Tuesday of every month, we have a Money Matters book discussion. You can read the book, or the person who reviewed the book will put out notes for you. On April, we're going to be doing How Boards Work and How They Can Work Better in a Chaotic World by Dambiso Moyo. And it is a very interesting book, and I implore you to please come and listen to the discussion. They're always very active and very newsworthy.
Thank you. And let's Um, Anna, you want to tell us what's going on with the Maryland chapter?
Yes, the Maryland chapter, we will having an in-person SSG class in Prince Frederick, Maryland. It's from, as you see, 9 to 2, and you can get additional information off of our website. And if you are in the Maryland, or sometimes even if you're a DC chapter member, you will be getting a copy of our newsletter that will be going out this week that will give you more details as to what the Maryland chapter will be doing for the rest of the year, actually. So thank you.
Thank you. It's always great to be able to hear other people do the SSG, so please hear as many different folks do it. It will help improve your own judgment. Jonathan, why don't you tell us about the Maryland Model Club?
Okay, sure enough. The Maryland Model Investment Club started in 2015. We're currently meeting virtually the second Saturday of the month. We have a meeting this Saturday, April 9th, that will begin at 10:30. And all are welcome. You can click on the link and that will give you access to the meeting. Our educational topic is still to be determined. We will be revisiting PayPal during our stock study session. If you have any additional questions, you can contact Kent DeYoung. He's our point of contact. And if you want more information, you can click on the link to go directly to our website for more information about the club and some of its activities and past presentations and things. So, thank you.
Thank you. Next slide. And Armida, why don't you tell us about your club?
Hi, everyone. My name is Armida Watson, and I'm president of Pinnacle Group Investments. We've been together 25 years, and so we've seen a lot of people, and it's been a lot of fun, but it's also a lot of work, but we enjoy learning and making money. And so for those people who think they might be interested in doing that, we invite you to come and visit us and see if you like what we do. And you can see my contact information, so you can contact me if you'd like to come and visit our club. We meet on the second Saturday of every month from 10 a.m. to 1 p.m. Thank you. And this month, we're studying and understanding the flow of economies and cycles, and our stock to study is going to be in Expeditors International of Washington.
Thank you.
Thank you.
All right, and I'm a member of the Montgomery County Model Investment Club, or MCMC. We just celebrated 5 years earlier this year, and we have 9 partners. We're online. That's the link that will get you to us. Our education this month is going to be making sense of the CFRA reports. I'll talk a little bit about it during my presentation, and we're going to be studying Adobe. And if you have any more information, our point of contact is our president, Marilee Hardesty. Next slide.
And I'm Cheryl Patterson, and I am a member of the McNova, the Model Investment Club of Northern Virginia. It started in 2008. We currently have 11 partners, always looking for more. April 12th is our next meeting, which is the second Tuesday of the month. We are still meeting virtually, and there is the GoToMeeting link. You can also dial in using your phone. The education is SSG Section 2, evaluating percent of pre-tax profit on sales, percent of return on equity, and debt to capital. The stock study is PayPal, and we meet from 7 to 9 p.m., and visitors are always welcome.
We got a lot of people looking at PayPal. Why don't you tell us about the Visit a Club program, Cheryl?
I'm happy to. It's in 2 parts, really. The first part for both the Maryland chapter and the DC regional chapter are a list of clubs that are seeking new members. And you can contact us if you are a club out there that is seeking new members. Please contact me. The email will be at the end of this program. And I will send the forms out to you to enable that to happen. Also, people who are individual investors that are looking for clubs to join. Also, you can contact me and we'll see about reaching out to some clubs in your area and having them contact you. And thank you, Kevin.
Thank you. All right.
Kevin,
And
can I
so,
just say one thing real quick before you
absolutely.
move
Go
on?
ahead. Go right ahead.
I'm just going to say a plug for Amita and the Pinnacle Group. They are actually featured in this quarter newsletter. They contributed an article on inflation. Just want to give a hands raised to her while she was on the line. Thank you.
She she and her team have always been very, very good. So yes, they deserve it. Golf clap for them all. Anyway, so we're digging into the BI. Here's the April issue. You may have already received it in the mail, but the thing is, you don't have to wait for it to be in post office. It comes electronically, and if you look over in the left-hand side, that's actually from my smartphone. I have the app, and it comes on in for it, so you can be able to see it. It comes in a lot earlier. It can be on your smartphone, it can be on your laptop, it can be on your tablet, or any other electronic device that you have. So keep that in mind if you want to be able to take a look at it. Next slide, please. And this is how you're able to find that information. If you go to Learning Center and Better Investing Magazine, the arrow in green points to where you can find the mobile device. It's a different sign-in and password than what you have for your BI stuff. So they'll walk you through it there to take a look at it. And then the other thing is that red arrow, the analyst reports and other resources, that's the additional information for any featured stock that's in the magazine. So you'll see that with both Nike and Pioneer Natural Resources. You can always click on that to be able to see more. Let's go to our next slide. And I always like to feature one article in there, and this one caught my eye. It's the Repair Shop. I've always liked the Repair Shops, great information. But they are featured one of our own clubs. They listed them, they have a typo. They said it's Lauren, Maryland, rather than Laurel, Maryland, but the Tropic Investors Club, and they all are part of the Caribbeana diaspora. And so they've all been around for 20 some odd years. The quote that caught me was the fact that 9 of their 21 holdings have more than doubled since they selected it. That's really, we need to get them coming on in here and showing us what they're doing, because they're obviously doing something right. And there's a picture of some of the club members. So take a look at that. And let's go to the next slide. And we also had another person from our region that was featured, even to our own surprise. There's a membership column where they talk about stuff that goes on with BI members or some of their clubs, and they featured our own president of MCMC, Marilee Hardesty, and she talks about some of her goals and stuff like that. So go ahead and read the article and come see us on the third Wednesday of the month. So that's the 16th of this month. And Marilee runs a very tight ship and doesn't let us get too far off. And we're always love to see people there. Let's go to the next slide. Okay, so we're now going to do our first 2 stocks. They're going to be in core. It's going to be Jonathan doing PayPal. And then followed by that, it's going to be Anna McBain doing Pioneer Natural Resources. So Jonathan, why don't you take it from here?
Okay, sure enough. Okay, let's dig into PayPal. Next slide. Okay, so there is an article in the current edition of the Better Investing magazine of cashless payments, aid, and fintech lending. And I encourage you, if this is a company that you're interested in invested in, take a look at that article because it's very interesting and they have some discussion regarding PayPal. Next slide. So PayPal is a large company that operates a technology platform that enables digital payments on behalf of merchants and consumers worldwide. Next slide. And PayPal is the most accepted digital wallet in the world. And what this means is that PayPal has a considerable competitive advantage over their rivals. It also indicates that there is potential for stronger recruitment of additional retailers and consumers. Next slide. So the world is seeing a huge shift in digital payment services, and retail e-commerce sales are projected to continue to grow through the future, at least through 2025. Next slide. Now, these are many of PayPal's products that they currently have that are active, and many of them are quite interesting. They have fraud protection services. Zettle is a sort of a competitor to Square, so it's a point of sale turnkey solution with hardware and software for merchants to check people out if you're making a purchase. Happy Returns, I've actually used the Happy Returns, and they really make returning products very easy peasy. Paydi is a recent product that they purchased in Japan, but it's a buy now, pay later solution. So if you see a product that's on sale now, but you won't get paid for a couple of weeks, you can purchase it now, and PayPal will put you on a very short pay later program. So Paydi is currently in Japan, but PayPal has a global buy now, pay later product too. So management really intends to complete $1 to $2 billion annually in acquisitions going forward too. So this is definitely something that they're going to consider pursuing going forward. Next slide. Now, more retailers are integrating PayPal at their checkouts, and PayPal is committed to developing new partnerships. The recent partnership is with Amazon, and that should prove extremely profitable going forward. Next slide. PayPal continues to innovate. They had a record number of products and experiences launched in 2021. One of the big launches that they had was they fully rolled out their new digital wallet globally. And they call that their super app. And that super app allows many different functionalities and features. One in particular that you can check out with cryptocurrency with the software. And they made a lot of additions to the Venmo app too. Next slide. So PayPal makes money in many different ways. 92% of their revenues come from transaction fees alone. Venmo revenues has reached $230 billion as of last year, and this represented a 44% increase in the revenues. And you can see that there's at least 8 different ways that Venmo itself can generate revenues. Next slide. PayPal currently has 426 million active accounts, 34 million, that includes 34 million active merchant accounts. They've had an increase in net new active accounts to 49 million. The total payment volumes has steadily increased, currently at 1.25 trillion. Their free cash flow has been increasing, currently at 5.4 billion. Next slide. Now, PayPal has given guidance that has been, for 2022, that has been less than stellar. And this is one of the reasons why their stock price had really plummeted over 50% or so. But management basically says that the guidance for this year has been relatively consistent with what other e-commerce peers have been doing. So they don't really they're not really that concerned about their forecast for 2022. Their revenues have been forecasted to be between 15 and 17%, which is still pretty good, but this was a downgrade from about 20%. Earnings growth is dwindling down, but there's quite a few headwinds that have occurred, including the Ukraine war, inflation. There's still some supply chain issues that they talked about. Interest rates are increasing, and there is some concern about losing the eBay account. Free cash flow will continue to increase. Total payment volumes will continue to increase at 1.5 trillion. They're also anticipating net new accounts to increase 15 to 20 million this year. Now, they had previously forecasted reaching a goal of 750 million accounts by 2025. Now they don't think that's achievable. And that was another reason why the stock price plummeted. However, management has a strategy. They have a plan because they're recognizing that the majority of their total payment volume is really coming from about 1/3 of their customers. So this is going to be their focus going forward. They want to generate more revenue from the most active users. Next slide. So if you're considering purchasing PayPal for your portfolio, this is one of the growth metrics that you should pay attention to, the transactions per active account. This is titled customer engagement, and this is one growth metric that PayPal itself and management are going to be looking at, because transactions per active account has been steadily increasing, currently at about 45.4, and it's growing about 11%. Next slide. PayPal has known for years, at least since around 2018, that they were going to eventually part ways with eBay. This is not a surprise. This is what they had expected. And you see that PayPal exited the year with eBay representing 3% of revenue and less than 3% of the total payment volume as of the last quarter. So this is not going to be a significant impact whatsoever on their bottom line or their top line for that matter. So management is really looking forward to moving on from making adjustments to their books related to the eBay. So next slide. Competition within the fintech industry is fierce, and PayPal, there are many disruptive companies that PayPal is dealing with. PayPal has been the most targeted platform to be impersonated in email phishing attempts also. Next slide. If you look at the graph, the black line is sales growth, and historically it's been phenomenal. It's been going at on average about 18%, which is better than the industry and the peer group averages. Next slide. Historical growth rate has also been increasing very nicely at 25.4%, again, better than the industry and peer group averages. The most recent quarter, again, due to some headwinds, it has decreased, currently at negative 48.5%. Next slide. Profit margins have been consistent and steady, although less than the industry average and peer group average. It's still a healthy 17.8%. Return on equity looks good. It has been growing steadily over the years, currently at 16.1%, and that's better than the industry average and a little below the peer group. Debt, PayPal has the lowest debt amongst the direct peers and the industry and peer group averages. So management, I think, has been doing a fantastic job with this company. Next slide. The historical 5-year sales and earnings growth are on the left in the green box at 18 and 27%. And you can see that the analysts and even PayPal, I put a star in the PayPal box, they're anticipating sales and earnings growth to slow. I'm getting an average of 15.8 and 14.5%. So I have to take that into consideration, the slow growth, when I'm developing my forecast analysis. And take a note at the future high price of $223 too. So I'm using a 10% growth rate, and that results in a 5-year projected sales of $40,860,000,000, which is consistent with what the analysts are projecting. My 11% growth rate results in a 5-year projected earnings per share of $5.93. And this is a little bit below what the analysts are projecting going forward. Next slide. I always use big charts. I like big charts. And this was very helpful here because this is a graph of the price earnings ratio. And since around August of 2020, you can see the PE steadily increasing over about the last year and a half. So I take this downward trend in the PA into consideration. So I'm not using the average high PE of 59.1. And basically what I've done is just taken an average of the 5-year average PE and the current PE, and I'm getting a high price of $237.30. And remember, the analysts were projecting a high price of around $223. So I think this price is somewhat reasonable. Next slide.
2 minutes.
My low price is calculated based on the closing price. So it represents 20% below that closing price. And so my low price is $93. Next slide. So if you were to buy PayPal today, you're looking at a 15% return, and I think that's fantastic. You can double your money in 5 years based on this 15% return. Next slide. So I think PayPal is a high quality growth company. They've got a lot of potential going forward. There are some short-term headwinds that have governed PayPal's share price movement, but there's a huge shift in digital payment services globally, and PayPal is the leading digital wallet in the world, so they'll take advantage of this. They are committed to provide billions of dollars annually to acquire additional companies and services. They're committed to adding more financial services and products. They are rapidly expanding their partnerships, and more importantly, they're going to focus on this transactions per active account to help generate additional revenues for the company. Next slide. So PayPal is a large, fast-growing company. It's well managed. It's currently on sale, and I think it's a worthy candidate to purchase. Thank you.
Thank you, Jonathan. Great job as always. And let's bring in Anna, and you can tell us all about the undervalued feature.
Yes, my name is Anna McBain. I'm with the Maryland chapter, president of Maryland chapter. Next slide, please. Got the article from BI Magazine, an April issue that just came out. Pioneer Natural Resource is an energy sector large company. It's an independent oil and gas exploration focusing on in Permian Basin in West Texas. Next slide, please. Next slide, please. Sorry, spoke to that already. Next slide, please. Oh, I'm sorry. As noted, this is the undervalued company. Pioneer Natural Resource, it actually began with two partners in 1962, Parker and Parsley. They merged in 1997 to form Pioneer, and Pioneer is still located in West Texas. That location they're staying with because it's good grounds for getting the oil reserves and everything that they would like to get. It's got 45 years of productive life remaining. So for them, that's a good location to stay. It's a highly regulated industry. And it's, oh, next slide, please. They produce daily 341 barrels of oil, the BOE, and the product mix is what actually ends up coming to others industries for actual use in gas stations, homes, and other industries. Right now, the proved reserves that they have is quite substantial. The last year they added pretty much daily was 371 million BOEs, which is probably the reason as to why the president feels that there's significant enough of reserves within the United States with the 7.2 billion to be released. That's the price, but to be released to the economy for us to use and help reduce the gas prices that we have currently in the world due to other factors. Next slide, please. So this is the peer group for Pioneer Natural Resources. There's, as you can see to the left, there's ConocoPhillips, and another entity is a Canadian group that is part of their peer group, and Fang, which is Diamondback. In addition to these peer groups, they also have other competitors that are alternative sorts of energy, like wind and solar, and they feel that they're going to be more their competitors in the future with more government mandating alternative forms of energy. Next slide, please. So for Pioneer Resources, they're producing more so than their growth over most of their competitors, except for Diamondback, which is FANG on the charts, but it's still producing very well, growing very steadily, and from their other competitors in the industry, if you notice, some of them have negative growth. Next slide, please. With the historical, you can see that the overall growth has been greater than, if you see the charts where it's a big dip, everybody got hit pretty much with the pandemic, but they bounced back really, as you can see, very strong in 2021, and they're continuing to grow strong in the first quarter of this year. As you can see for Pioneer, they're based about heads and tails over the rest, over 1,000%. That's definitely a major major change and increase for an organization to do, but they're succeeding very well. Next slide, please. Okay, the management for Pioneer, I feel that they're doing an excellent job. They're managing their debt. They're keeping the reserves at a high level so that they have good functions within the cash flow for the organization. They're pretty much above everybody, or working in lines with everybody. ConocoPhillips and the peer groups are slightly above them, but I still think that the way they're handling their business makes them a good management company. Looks at, if you continue down towards the return on equity, again, they're just about above all of their in the industry, except for ConocoPhillips. And as you saw on the chart, previous chart, ConocoPhillips was had a much larger piece of the industry within themselves. The debt to capital, they're taking time to reduce their debt, even though with the cash flow that they're having, they thought that this year they were going to have reduced prices, but as we saw, the crude price has actually gone up, so that's going to give them even additional more funds in which to reduce their debt using actual cash. And the other factor for Pioneer is that they pay their dividends, and they're continuing to pay their dividends and would like to continue to pay their dividends. And I jumped ahead again, sorry. Next slide, please. So even though the the analysts had picked a higher growth rate for Pioneer, I took a more conservative approach and came in a little bit lower. I know that for the most part, the forecasts are going up, and it will continue to go up, but the projection I felt was based on a lower stock price. And at this time, at the time that the industry, what the analysts were, reviewing the stock. So I took a slower growth rate for myself. Next slide, please. Now with the projection of the, as you can see, it's 12.65. I still didn't want to be conservative. I know things are turning and the growth will probably continue to grow, but I wanted to stay conservative and not be above the sales. So I went with 8% for the forecast of the earning per share growth rate. Next slide, please. So, all right, spoke to that too. I wanted just to note that here that the low prices was between 128 and 286 at that time, and the current price was $215. But currently, the price is $253, and that's above the low projections for the next future for 2024 to 2026, and with the high price of $340. As you can see, that with the the undervalue of the stock, it's almost right in line with the current price for the low. And so I figure we need to, oh, I'm sorry, next slide, please. Yes, to the price ended up coming above what the industry feels that it was of 340 with the high price of 358. That should have been changed. Okay. Next slide, please.
3 minutes.
Okay. So I took using the stop price of the 253 and following VI of 20%. I used my low stop price of $202 to come up with my low low stock price forecast. Next slide, please. So based on this, the current price of 253 and the forecast low of 202, it shows that at this time, Pioneer Natural Resources is a hold, and the annual rate of return, it's 7.7. We're looking more for something like around the lines of 15 or 16 or 15%. Therefore, though I think the company's being well managed, I think that right now, Pioneer is something you might want to put on your watch list. I'm sorry, next slide, please. This is just some news you can use. Next slide, please. So I feel that Pioneer Natural Resources is a large, steady growth company. It's well managed. I think is unfortunately a little overvalued at this time. They are paying dividends and they can want to continue to pay the dividends, which is a good buy for their shareholders. The price is a buy up to $240, but the current price is $253. So this time it's a candidate to be on the watch list. Thank you.
Thank you, Anna. Great job. So we're coming into another one, so we're going to be looking at in plus. And again, just a reminder that all of us, whatever you see in terms of our judgments, make sure to do your own research. And we're going to now look at Nike and installed building products. So let's go to the next slide. And I'm going to talk to you tonight about Nike. Nike's a stock to study for April. And a lot of people may be thinking, oh, Nike, how much more can it grow? They think it may be stuck in the growth era that had Michael Jordan and Mars Blackman back in the 80s. And well, let's take a look and see what they're thinking in terms of growth going into the future. So let's go to our next slide. So again, it comes from the Stock to Study. Here's the article that's in the BI magazine, and you know what the editorial's advisory and security review committee acknowledged. Yeah, it has a lofty high PE, but the thing that caught my eye was that they said analysts' expectations that the company may turn in strong growth over the coming 5 years. I'm not looking for just stuff over a quarter or two, but if they're looking for 5-year earnings growth, and the security and reviews committee thinks that got my attention. So let's go to the next slide and let's try to figure this out. So some basic background on it. Nike's in the Dow Jones 30. They have been for about 5 or 6 years. They replaced Alcoa. This is not an explosive growth company. It's 44 billion in sales. They're out of Beaverton, which is just outside of Portland, Oregon. It started as Blue Ribbon Sports and became Nike in 1970. And of course, if you had bought this at the IPO, you wouldn't be in here in this class. You'd probably be out on your yacht and the like. But Nike is a Greek goddess of victory. The other thing to keep in mind is that there's two classes of shares with Nike. There's the A shares, which are basically controlled by Phil Knight's foundation, Swoosh LLC. And the stuff we're looking at tonight are the B shares, which are for the general public. But most of the controlling shares are in the A, pretty much like it is with Berkshire and a couple other companies. So just keep that in mind. But he retired. And let's see what's happened since he's retired. Next slide. So it is a stock to study, and keep in mind they're saying, okay, they think it can double their money in 5 years' time. So they should have good long-term prospects. It should be a long-term buy and hold. I always say stock to study should almost be like a responsible teenager. You should be able to walk away a bit, and nothing awful will happen to it. I know sometimes people sort of poo-poo these featured stocks, but look up in the upper left-hand corner. The committee members, all of them have a CFA as their designation. And for people who don't know that, charter financial analysts, they're people that are long-term fundamental investors that really look at all the details and the balance sheets and all the financial statements that go on there. So if they're saying this, this sort of catches my eye. And again, from the article, here's the inside what they were saying is that over the past 5 years, management has increasingly invested in direct-to-consumer marketing. It's now under Nike Direct, and it's reducing their costs and boosting operating margins. That's something that's sort of music to any investor's ear. So let's see how that works out. Let's see what's going on. Next slide. Let's just sort of do a quick acid test. There's the front side of it. It's got generally up straight and parallel, but you can see those two green circles down there on the earnings. Earnings is in blue, and those are big dips. So we're going to have to sort of investigate and figure out what the heck happened there. The acid test is how is it done over the last 4 quarters? Well, it passes. It's up. The latest quarter, if you see that in yellow that I've highlighted in the upper right, the earnings is a minus 3.3, so that isn't so good. So that gets that a fail. But for a company of this size, 5% in sales is not bad. Is not bad. And here's the other thing is that their return on equity is better than the industry average. So it passes the asset test, not with flying colors, but it passes it. So yeah, let's continue and let's take a look. Next slide. I like to look at the CFRA report. And again, we'll talk about this at the MCMC meeting on Wednesday the 16th, where we do a deeper dive. But the stuff that's on the second page, and this has to be one that has a star rating or a qualitative report, is that this information comes directly from the SEC, and CFRA does some editing to get it down to something reasonable on one page. And what's really interesting is that you don't have to do a lot of the deep digging on like the management discussion analysis and some of the other things. You can just read this and take a look at it. You can see the brands. I want to zero in on this one in the lower left, the impact of major developments. They have a new CEO, John Donahoe. He has a strong connection with Nike brands. Expertise in information technology and digital commerce makes him well suited to build on Nike's digital momentum and consumer direct offense. That's, again, consistent with what we saw in the stuff previous. So let's see what they're going to do. Next slide. And this is the CFRA industry survey. You can get through the libraries. And it just sort of looks at stuff a little bit bigger. And what they're telling you here is that basically all these retail customers or industry, they have to have an e-commerce platform to really sort of reach out to that. So it's not going to be just brick and mortars. And the people that do that best are going to really sort of continue and thrive. So those are the things we're going to see. I mean, everyone's been talking about that, particularly after the pandemic. So that's pretty easy, but there have been people that have been ahead of the game. And that's sort of what I want to see. So next slide. This also comes from the CFRA industry survey. Nike's clearly the biggest one in this industry, and you can read through it. I have hyperlinks over in the upper right, the credit rating and the debt to EBITDA ratio. Those go to Investopedia, so you can take a look at it. But though it's referencing, the reason I have that is that list of all those numbers down in the lower right that are highlighted in yellow, those are sort of their featured companies or be competitors. And we don't normally look at credit rating, but Nike has the strongest credit rating out of all the ones that I was sort of looking at. And that debt to EBITDA ratio, we don't generally use in the SSG, but it's a good indication to see how leveraged they are. And the lower the number, better. And they are actually better than a lot of the other people in there. And if you want to know more about it, just download this handout and click on this link and you'll go straight to that location. Next slide. This is stuff I just found from YouTube. All these 3 screen captures come from that first of the sources. I'm going to butcher his name, Jamin Barande or so. And this was, 3 years ago. He was talking about what Nike was doing in terms of its digital transformation. So in the upper left, that triple double plan is that they wanted to double their innovation, they wanted to double their speed to market, and they wanted to double their direct connections. And they were talking about this in 2019. So, 9 months before the global pandemic. And all of that came out of Nike's plan in June of 2017, where they unveiled their triple double plan. So right after Phil Knight, the founder, left. So they were really trying to innovate and going forward. And what they're doing with this direct connection is they're basically cutting out the distributor and retailers and trying to deal directly with the public and selective retailers that they work with. And so I would look at these YouTube videos are rather short. And the second one is actually comes from Nike's global head of digital products. And again, he's laying this out, a year before the pandemic, what they're doing. And it's exactly the stuff that's now in vogue now that we're into a pandemic. We're going to be operating differently, and they were ahead of the game. So that's really sort of caught my eye when I was doing this study. Let's go to the next slide. So if you want to read more about it, those are all hyperlinks. You can be able to take a look at it. The one in the lower left-hand corner is a trade publication. And I like to see if I can find some trade publications that aren't talking from an investment point. And they really sort of talk about what the experience is on their end. So when you're doing your research, take a look for stuff like that. That's really kind of interesting. In the upper right-hand corner, the image from Better Investing, those are the reports that you can get for any of the featured stocks. And again, if you download this handout, that is a hyperlink. So if you click on that image, it will take you directly to that location. You have to obviously be a BI member and you have to be signed in, and will take you right there if you're having trouble finding where that information is. Next slide. So I like to sort of do a quick look at some of the competitors. So Nike is in the upper right. We always sort of like to see up, straight, and parallel. In the upper left is that's Adidas. They're a German company. You buy them on the over-the-counter market. The two on the bottom in the lower left, that's Under Armour in the S&P 500 out of here in Baltimore. And then the one in the lower right is VC Corporation out of Denver. They're also in the S&P 500. And you may not know, but VC is, they do North Face and Timberland and some of those companies. So pretty good. Let's go to the next slide and look at some more competitors. So in the upper left is, no, you had it on slide 78. Slide 78, so there's Decker. They're in the S&P 400, and they're out of Southern California. And in the upper right is Crocs. They're out of Denver, and they're also in the S&P 400. Very popular, those Crocs shoes that middle schoolers and high schoolers like to wear. In the lower left is Skechers. also in the S&P 400, and they're out of Southern California. That's been popular in our community. I think it's one of the top 100 or 200 in our stuff. The stuff that was in the article that they were saying were competitors, Puma is a German company, not in there. Antia is a Chinese company that is really sort of eating Nike's lunch there. ASICS is in Japan. And the last one there, I just saw when I was watching the NCAA women's basketball tournament last night. And it turns out that that one is a recovery shoe, but they're privately held. So I'm just trying to catch a wide berth. And let's go to one more slide, and I have even more competitors.
2 minutes.
Thank you. That's Wolverine Worldwide in the upper left. That's Hush Puppies. Lululemon is in the upper right. Foot Locker in the lower right. And Shoe, that's Steve Madden. And these are all in the big indexes, either the S&P 600 or 400. Next slide. So my historic sales, I took out those outliers. The 2017, it was the earnings. That was basically the rollout of this digital direct connect program, and the other one was the rollout or the problem with the global pandemic. So I took those out, and they just when I did the future earnings, you can do that, and I'll show you on the next slide. They sort of track pretty nicely on there. So those were sort of the things I was using to sort of guide myself. Next slide. So this is how you use your detailed estimates. There's actually a good stock up webinar on this one if you want to know how to use it, but you can download from data, go to detailed estimates. There's number 3 in the upper left will pull on out. You can plop in like value line numbers, and it will sort of help guide you. It doesn't mean you accept them, but they sort of help guide where you're going to, and then you hit update study and you can be able to take a look at it. So that's what I did to be able to help guide those numbers that you see on the previous page. Let's go forward. Let's go to slide 82. And so here's my pre-tax profit margin. I decided to look, it uses competitors Crocs, Skechers, and Adidas. And again, pre-tax profit, they really, really have improved a lot, Nike. That digital connect is really improving their profit margins, and you're seeing it. Only Adidas and Skechers are 2/3 as good as what Nike is. So they're really sort of leading the charge there. That's good to see. Next slide. Return on equity, Crocs really, really did well, but I'm a little concerned with it because it's so erratic. They had a negative return on equity, and then they jumped all the way over, way above everyone. So I'm thinking maybe they're leveraged or something else went on. Wasn't able to investigate. But that return on equity for Nike, without a lot of, if it has average debt, that's a really, really good number. So let's keep that in mind going forward. Next slide. Debt to capital, again, lower is better here. So Skechers is the best on debt. And again, Crocs did add a lot of debt. They seem to be paying it back down. But again, all of them seem to be pretty well. They're all within the guidelines for debt, so that's not too bad. But again, Skechers is the best out of there. But nothing to worry here. Next slide. So I'm going to forecast from quarterly. If I take out some of those numbers, you can see my historics in the upper right. I'm forecasting 9.5 for sales, so it's higher than the historic, which is sometimes you go, why are we doing that? But they seem to have a really good plan, and the analysts are talking about how they can go forward. And so I'm doing that. I did the preferred procedure, and I came up with 12.7. So again, earnings are going faster in sales. It's an optimistic forecast. But I think a lot of the things I read in terms of this direct connect and what they're doing and the way things are rolling out, I feel pretty confident that they'll do that. And I'm still even below where Value Line was estimating. That little blue dot above sort of those red dashes in there is where Value Line is. So I'm staying below that, and I'm still, I still feel pretty confident. I could even be a little bit more aggressive if I so choose, but I chose not to. Next slide. Here are my historic high and low PEs, and as they were saying in this, yeah, it does have a high multiple. I took some outliers. You can see my what the historic numbers were in the lower left. I adjusted them downward. I anticipate that Nike will, their payout ratio that those sort of slow down because I'm guessing they're either going to want to conserve cash to do some more build out of the direct connect, or they want to sit there and maybe pay down some of that debt. There'll still be a rising dividend, but it just won't rise as fast as the earnings are going, is sort of what I'm sort of anticipating that will happen. But yeah, this thing's, if you look at the current PE ratio at 35.2, it looks like it's pretty pricey right now, and maybe overpriced. Next slide. So my forecast earnings, I got 241 in the future for a high price. I got a low price of 98.5, which is about 26 off the current price. I didn't feel comfortable just doing the typical growth option. I get a buy in a 3-to-1, but if you look where I have that yellow in the upper right, the potential total return is 80.6 when we're trying to get to 100%. So it's a little bit off of where I want to, but I still feel like I'm doing reasonable judgments. Next slide.
Plus 3 minutes.
All right, thank you. My 5-year estimates, 3-to-1. I don't have it as a 15% total return. I think the buy is at 124. Let's go to the next slide. I think it's a large, mature growth company. I think it's really transforming what it's doing. It's well managed. It's fully priced. I don't think it's a buy right now, but it's a good candidate to purchase. I say to purchase, it really should be on your watch list. So that's it, and thank you. Let's go to our next presenter. All yours,
Hi,
Amita.
I'm Ramita Watson. Thank you. Hi, I'm Ramita Watson. I'm going to be talking to you tonight about installed building products. And basically, in terms of how I went about finding this particular stock. And could we go to the next slide, please? Next slide, please. Thank you. What is it, installed building products? What is it that they do? Basically, they install insulation, waterproofing, fire stopping, fireproofing, garage doors, rain gutters, wind blinds, shower doors, shelving, and all sorts of other insulation and sealant materials. They also sell a wide range of insulation, sealant, and acoustical materials. And who do they serve? They serve home builders, multifamily, and commercial construction firms, as well as the individual homeowners and repair and remodeling contractors. They have a nationwide network of 210 locations. They were founded in 1977, and they have over 900 employees. Next slide, please. They are currently in the industrial sector. In terms of industry, they're in building products and equipment. Their ticker symbol is IBP, and they're a medium-sized company. Next slide, please. How did I find this company? Well, I've been following this company for quite a while. And actually, I found it, and I said, when I was asked to do this, I said, well, you know, how do I go about finding another stock? And many times what I do, I go back and look at some that I've found earlier. And also I found this particular one had shown up again in January of 2022 in Ticker Talk. But I first found it, I see it says I found it in October 2021, but you also see on the next slide. Next slide, please. I found it in March of 2021. All right, in the Better Investing Quality Growth Company screen. And so I've been watching this company. Matter of fact, one of the clubs I'm in has owned it for over a year. And we had it at its high, and now we have it at its low. Next slide, please. I'd like to talk something about the company and its growth strategy. First question is, okay, installed building products, but more often than not, nobody's ever really heard of the company. But basically what they do is, in terms of all of these products that they sell and all the services that they provide, what they do is they do a lot of it through acquisition. And what they don't do is they don't change the name of the company or pull it into the company in terms of changing the management once it has been acquired. So many companies you may be dealing with actually are businesses of installed building products. But let's look at how they grow and how they plan to continue to grow. As you can see, graph, you can see the majority of what they do is Back, please. Thank you. All right. Basically, in terms of their geographic growth, what they do, like I said, is in terms of acquisitions for mostly their primary in the residential market. And they also, what they do is they lead the market in terms of installation installers. And they have many new branches. Matter of fact, they're trying very hard at this point to expand even more nationwide. And in terms of product, what they do is, as you can see, most of their revenue in 2021 was acquired through new single-family homes. But they also do a pretty good job in terms of commercial and repair and remodel. Okay. Next slide. Next slide, please. Can you hear me? Okay. I don't know what's going on. Can you hear me?
97, 96 is showing.
Okay, thank you. What it is for some reason it's telling me I've audio degradation. Thank you. And something else is showing up in the middle of, all right. But anyway, let's talk about actually how the company operates to see how they use their money. And as you can see, for the last 5 years, in terms of organic revenue growth, they've outpaced the market in terms of market completions, ranging from 5 to 16%. And this is, and their gross profit margin, the goal was to be stable. So that means in the future, they're still looking around, 27 to 30% gross profit margin. And they're looking for an adjusted earnings per share growth in the mid-teens, as well as adjusted EBITDA growth to be around 25% organic growth. But in addition to that, they also do a lot of acquisitions. And so what they're doing is they're planning to target at least another 100 million in terms of revenue annually through acquisitions. And also in terms of gross profit margins, they're looking for it to increase through their purchasing power due to the product diversifications. And I shared with you the number of products in which they actually offer, as well as services. And in terms of earnings per share growth, they're just, hopefully it's going to be adjusted, based upon the share price. And in terms of adjusted EBITDA growth, they're hoping to at least maintain a greater than 10% margin. Next slide. One of the things they do, as I said, they spend a lot of their money in terms of acquisitions as well as organic growth. And so I thought it was important for us to look in terms of how they handle their cash flow and their cash balance. And as you can see, for the last 5 years, each is, steadily increased except for the operating cash flow in 2021. But that had a lot to do with the number of acquisitions they did that year as well. And in terms of capital allocation, you can see as well that a whole lot of money in 2021 went to acquisitions. And capital cash flow priorities, it's number one for them. And acquisitions is the main use of the capital. Next slide. One of the important things that the company also is very interested in is maintaining a very strong balance sheet in order to support their acquisitions. And this is a slide that shows you how successful they've been in terms of their record of acquisitions. So far, they've had over 165 successful integrated acquisitions. And what it does, it really provides what they feel is a competitive advantage in terms of the diverse service and product offerings, in terms of cross-selling opportunities, ability to leverage the costs across multiple products, in terms of diversifying their in-market exposure, and we can go on. But if you look to the right, we're looking at their pattern of acquisitions. As you can see, prior to 2003, they were developing it. They had 22 2003 to 2007, they expanded. Of course, 2008 to 2010 was during the recession, but 2011 present, you can see they've had, what, 87 acquisitions? And they continue to do more. Matter of fact, they've actually made acquisitions here now in 2022. Next slide, please. The question is their top line growth sustainable? Well, as you can see, they have grown steadily since 2010, and their revenue growth has continued year over year. And basically, they have not changed their growth strategy. And so it appears that they just may be able to continue to do what they've done in the past. And what they're basing this on is, of course, the number of housing completion growth, as well as additional not revenue completions, meaning completions that aren't necessarily based upon housing growth, but based upon the other services that they provide. Next slide. Also, to show you in terms of what they're doing in terms of maintaining a strong balance sheet, as well as also doing a good job of managing their debt. You can see in terms of their adjusted gross profit, is grown year over year. Their adjusted selling administrative costs, okay, they've managed to handle those very well. The adjusted EBITDA managed well. The working capital continued to increase year over year. All right, so next slide, please. And so in terms of the stock selection guide, my quick analysis said that, and I'll show you the stock selection guide afterwards to support what I'm getting ready to say, is that basically it's up straight and parallel in terms of sales, pre-tax profit, and earnings per share. Year over year returns for sales and earnings per share have both been greater than 20%. They have double-digit increasing sales and increasing the earnings per share and increasing pre-tax profit for the last 5 years is based upon the fundamental data that we've seen from the stock selection guide. Also, I've estimated double-digit estimated figure sales and earnings per share. The stock selection guide shows that the return on equity has been greater than 15 for the last 5 years. And granted, they do have high debt, but it's been very consistent in past years, but a lot of it's due to acquisitions. Now, what has happened a lot with this particular company is that the price has dropped recently, and a lot of it has to do with the last fourth quarter analyst estimates. But what you'll find if you do much analysis of a particular company, this is a pretty regular pattern for them. So it's nothing to be alarmed about. Next slide, please.
2 minutes.
Okay, I wanted to show you the their peers and also the ownership. The graph on the left shows you mutual funds that actually own the stock, and then the picture on the right actually shows you some of the peers that are closer in market cap to IBP. Next slide, please. And here's the stock selection guide showing you the lines I indicated earlier in terms of sales, pre-tax profit, and earnings per share being up straight and parallel. I talked about the year-over-year growth in terms of sales and earnings per share. And then I talked about the fundamental data showing that historical sales and historical earnings have been greater than 15%. And I'm predicting that future growth will be at least double digits. And they're doing a pretty good job in terms of management, in terms of pre-tax profit and sales and return on equity, and doing a pretty good job in managing their debt. It's high compared to a lot of companies, but that's how they grow. That's one of the ways they grow. Next slide, please. In terms of looking at the price and earnings history, you can see that even though we're early in the year, the earnings per share growth is higher than it's been in previous years, and it's grown year over year. This is column C. The current price earnings ratio is currently less than the average PE ratio. telling us that there looks to be some value in a particular stock. And so I used an average high PE of 35, and I used a low PE forecast of 13.6, and that gave me an upside downside ratio of 6.0 to 1, which put it in the buy zone. And we're looking at a projected annual return of around 18.2%. Okay, and you can, looks like the buy price to satisfy the upside down ratio of doubling in 5 years would be at $113.20. All right. The price on, I think it was Thursday maybe, when I did stock selection guide was 87.87. I think it's even lower than that. I think it's now down to 85. Next slide, please. One of the other things I wanted to show you was to show in terms of the SSG Plus and looking at the sales, pre-tax profit, and earnings. As you can see, the sales growth has been increasing the last 3 to 4 quarters. And to me, that shows that, and also it shows that the sales are starting to increase again now that we've come out of the recession. Because one of the things that has been affecting the company has been supply chain issues. Matter of fact, to the point that one of the things that they felt that were affecting earnings was the fact that they're no longer able to actually get their supplies from their suppliers. They're actually having to go to places like Home Depot to buy many of their supplies. Let's look to the manifest investing graph to the right. And I just wanted to show you that in terms of the graph, you can see that the relative return and the quality of the company have been improving for the last 4 to 5 quarters. Next slide, please. And so I shared with you many of the analyst opinions. You can see Zacks the whole value line says they see above average long-term potential, and that was at 95.40. And they were forecasting a low of 15% and a high of 27%. But Argus was a hold, CFRA was a hold. But we had small cap informers a buy, manifest investing was giving a par of 18.8 with a quality of 76. Full caps has 82%, Morningstar. Narrow mode selling at a discount. And I couldn't find any BI member sentiment on this particular stock. Okay. But understand that a lot of the hold had to do with the stock price dropping and also with them having missed the fourth quarter analyst estimate. Next slide, please.
Plus 2 minutes.
All right. And so my conclusion is that IBP, this particular company has strong top line gains, even though they had a softening of volume growth in the fourth quarter. The demand is solid, particularly in a very tight United States housing market. As I shared with you earlier, granted some weaknesses appeared in the last quarter, having missed their analyst estimate, but it's common with this particular company. Their earnings are expected to improve once they overcome their supply chain issues and inflationary pressures. They have a good product mix with good pricing power. And also they'll be able to continue to make acquisitions to diversify their operations and other services to expand their margins and also expand into Western regions of the company. And they've made plenty of acquisitions. As a matter of fact, their acquisition in 2021 boosted their sales by 19%, and they're looking so far to boost 2022 by 8.5%. And they were also able to obtain their debt at very reasonable rates, which will support future acquisition activities. And so basically, all the long-term fundamental trends say that it's a buy. Thank you.
Thanks, Armida. Great job. And you are now our 23rd different presenter that has done something in our 18 months. So you've now heard us talk for about an hour on all 4 stocks. There's a quick review. Let's go to the next slide and let's start to, we'll give you one sort of overall recap. So let's advance to slide 109. So this is where we talk about the life cycle, and this comes from T. Rowe Price, and where companies have a growth, maturity, and decadence, and it's visually shown up in the BI handbook. So let's go to the next slide, and we'll talk about that. So here's our life cycle, and Jonathan, why don't you tell us why you sort of put PayPal where it is, they're sort of between mature growth and explosive growth.
Right. Yeah, I like PayPal. I think it has a lot of growth potential left. It's a large company, but management has been doing such a phenomenal job, and they've been very, very innovative. I really like this new marketing strategy. Keep in mind, they have close to 500 million active accounts. And this reminds me of Apple. There was a time when people, investors and analysts, called Apple an iPhone company. But Apple had been working on providing services. Apple at that time had hundreds of millions of products around the world. They currently have 1 billion devices around the world, and their services are slowly approaching to be their largest revenue source. So I look at PayPal similarly. They have about almost 500 million active accounts, and they're going to grow that. That is one of their focuses, is to concentrate and market their active accounts. And then finally, their product, their software. So they've developed this super app, and one of the things that they're trying to accomplish is they want to continue to improve on this software platform, and they want to add more financial services, including banking and stock trading too. So they have been very, very innovative, and they're really looking out much further out in the future to keep this company growing. So anyway, I thought there's quite a bit of runway left for this company. Thanks.
Thank you. Anna, why don't you tell us why you have Pioneer sort of in the mature growth area?
Well, they've been around for a long time. I think that they'll continue to be a viable company in the industry. I think their thought process and plan for their company is to stay safe and work smart. And with that, they're going to continue where they are. They're not going to expand to other markets at this time, but continue to develop and take the resource where they are. And the management is doing a great job of keeping their people safe, managing their funds, managing their debt, and being able to pay dividends to the shareholders, which is making them happy. So I think it's a good company. It's just, at this time we'll continue to grow, but slowly.
Okay. And Nike is a behemoth of a company, so for it to be mature growth and not in the stabilizing and decline is just testament to how good their management is. And like what Jonathan was saying with PayPal, is that Nike is almost really becoming a technology company that's in sneakers. If you look at, they now have a Nike app where they can customize stuff so that you go to the store and it will be there waiting for you. And at the stores that they have, they're no longer, you can't get Nike on Amazon. You have to go through either their own app or through stores where they hire the people that are experts in Nike stuff. So very, very interesting and innovative. And they were doing this, 2-3 years before the global pandemic. And that's really the way we're going to be operating going forward. So there's a lot of good prospects with this going forward. Armida, tell us about installed building products and why you have it there.
Well, I have it in explosive growth. First of all, it's a mid-cap company, but I'm very much impressed with the management and what they've been able to do over the last almost 20 years. And I see the ability to continue, particularly in the housing market, since we have such a shortage of home building in this country. And also they continue to not only grow organically, but they have all kinds of plans to continue to acquire new companies. So I can see a lot of growth still occurring within this company.
Okay, thanks. Let's go to our next slide. Now it's time for all of you to vote. And Cheryl, if you can put up the poll, and we'll let everyone take a shot at it now saying what you think.
Also, if anybody has questions, please submit them.
Thank you, Ed. Okay, so the poll is open. We don't know who you're voting for, and you can only vote once. Okay. I think people were ready to get in there, man. They're jumping. We got 50% of you already voting. Let's see if we can get it up high. We're over 60. Can we get it up to 75? Can we get up into 80s? Can we get into 80s? Looks like we're slowing down here. And one more vote will get us into the 80s. Come on. Nope. Nope. All right, Cheryl, I think you're going to have to close us off. We got to 78% of you participating. That's pretty good. And are you able to share that? Or there we go. Whoops. Looks like we lost it. Can we put that back up? Or did I muck it up somehow? There we go. Okay. So you can see it was overwhelmingly that everyone loved PayPal. Well, we will make a note of that, and congratulations to everyone. Again, do your own research on this stuff, and let's go to our next slide, and we got a few more things. Jonathan, do you want to sort of tell us a little bit about volunteering in either of the two chapters over the next two slides?
Sure. Where the Better Investing is made up of volunteers, so we're always looking for additional help. We are a community, and we are a community of like-minded individuals who are helping to educate one another to improve our financial lives. So any and all help is always welcome, and it's a good way to meet other people, learn more about investing opportunities, and I think everyone should try to take advantage of it. So.
And let's go to the next slide. I think there's more on volunteering there. I threw that right at you.
I'm sorry.
I know it's you. No, that's okay. Kent usually does this, so you're filling in for him. So let's go to our
Right.
next slide.
Okay.
There you go.
Okay, so there are, and I think I sort of touched on. So again, you can go to the Better Investing website, and you can find more information about volunteering. But again, you can learn new skills and hone your investing skills. You'll educate others. You can help planning of local events and classes. Our current chapters in DC, Maryland, are actively involved in educational classes, and we can always use volunteers also. And as volunteers, you'll get discounted rates on the Better Investing National Convention and on a lot of the publications and that Better Investing headquarters offers too. So come one, come all, and join in the fun and help teach others. Thank you.
Okay. I think at this point, why don't we take some questions? Do we have any questions there, Ed? And you can direct them, if they're directed towards a particular company, you can send it over to that presenter. So did anyone say anything or want to go on that?
Yeah, there was a question from Anita asking about how do you get the peer group comparison related to that. How do I pull the peer group data from BI?
Mm-hmm.
And
I don't know.
it wasn't directed at anybody in particular.
Armida, you want to take a crack at that one?
Yes, mine came from Morningstar.
I say in mine, I found it by looking at the company information. Like I said, in the CFRA report, I found it there, but I also looked to see BI just had Adidas as a competitor, but I just started looking in that footwear, and as I'm reading, I start looking for competitors, and that's how I ended up getting a list of almost 12 or 13 to sort of winnow through. Anna or Jonathan, you want to talk a little bit about how you found your competitors outside of the BI tools?
I also use Morningstar and CFRA. You'll get different peer groups, and sometimes the 10K and 10Q from the company will give you some ideas of what their competitors would be too. So,
and that's where I found my competitors was basically from the company's information. Sorry.
Okay. What's our next question, Ed? Or hand raised if you want to take care of anyone there.
I think that was about it. There was an earlier comment from Lola reiterating something that was mentioned as far as what's her name, Marilee
Mm-hmm.
being in the BI magazine. So
Yeah. Okay. Was it Antetta, if I'm saying that right? You're self-muted, but you had your hand raised. So go ahead and unmute yourself and go ahead and ask your question.
so
There we go.
Okay, so the data you entered, the table comparison, peer group comparison on the table, is that something already done or you have to plug in each year after you study peer groups?
So you're talking about like the data that's already, like when we pull it up in the SSG and trying to figure
Yeah.
where we're showing those comparisons?
Right, the first couple of study
Sure.
you show that the table each
Sure. So
year, the peer compare data.
good question. So Anna and Jonathan, you want to tell us how, since you guys did some really good comparisons there, how the BI tools are able to help you with that? Do both of you want to sort of chat a little bit about that?
Well, I'm trying to understand. Are you saying there's actually a compare button, and
Okay.
when you click on that compare button, Better Investing has automatically populated the peer tickers. Is that what you're saying?
Okay, then it's okay. The BI.
Yeah,
it's automatic. Yeah, Better Investing will populate. Normally, they'll populate the compare peers with specific companies, but you have an option to change those peers too.
Okay.
So after your research, if you decide that there's certain companies that might be more directly comparable to what the company you're working with, you can make those changes on your own too. So
I have an SS is a plus. So I have a choice. I can find a comparing peer on the SS
yes.
plus.
Yes.
Yeah.
Okay.
Yeah, there's a button. There's a button on page 1 and also on the second page, evaluation and return. There's a button that's called compare peers. And when you click on that, you can compare the sales, earnings, pre-tax profit, and other growth metrics with the specific peer. So.
Okay, I got it. I haven't done it. So thank you so much.
Okay.
Sure.
Okay, you're welcome.
can we also have another question directed at Jonathan? Jonathan,
he loves those questions. So go ahead, Jonathan.
Jonathan, do you know if there are any PayPal competitors are allowing payment with cryptocurrency?
Yes, Venmo. Oh, I'm sorry. Block. Block has an app called Cash App, I think it's called, and they are one of the direct competitors with PayPal. But I'm pretty sure it's Block, and they call their app Cash App. And you also have the capabilities of making transactions with cryptocurrencies.
Excellent, thank you. And Anna, this is the question directed at you. Do you disagree with the article in BI where they are saying that IBP is undervalued since you concluded that it is overvalued?
Did that go to Armida? She did IBP?
Aramita, yes.
Armida, you want to talk about how you saw? I think it's probably because the price went down, but what was you don't think it's overvalued, do you? IBP?
Almost certainly not. It's undervalued, highly undervalued. Matter of fact, if you remember on my slides, it was undervalued at 97 and is currently, I think, around at 85.
Yeah, to the audience, sometimes a 5 or 6 week lag from when they are announced as a stock and when they've looked at it to when they finally to where we are today. So it can be a little off on that. Other questions, Ed?
Nope. I think we're good to go.
I see Cynthia has her hand open. So if you're self-muted, so unmute yourself and ask your question.
Those were the questions were from Cynthia.
Oh, well, then here she can talk some more.
Yeah, I made the mistake of
was supposed to be to Miss Ann, it's supposed to be for PDX. Is the undervalued in the BI article, but she concluded saying it was overvalued. So I just wanted to know, they had something in there maybe that she disagreed with, or her estimates had her come in as an overvalued company when BDX in the BI was marked as an undervalued stock to study. I think for me, it's a combination thereof. It was me being conservative, and the fact that if the price had remained at the 215, when I initially did my SSG, I did have it as a buy, but when the price went up to the 253, that's what took it out of the buy zone for me. Okay, that helps a lot, because a lot of times I kind of get iffy or uncertain when I see something that says undervalued or overvalued, and I come out totally different. So just wanted to see how you got that. So that makes sense to me. Thank you. Thank you.
And I see Lola has a question, or I don't know if she has her hand up, but I'm going to unmute her in case Lola, if you have additional information, you can unmute yourself and ask a question. Go ahead.
I don't have a question. Are you
Okay.
putting words in my mouth,
I
Ken?
just saw the question in the question pane, so I figured I'd open it up. But no, you can be quiet. You can just bother Jonathan afterwards. How's that?
Okay.
Anyway, glad to have you here. You see anything else, Ed?
No, there isn't.
Okay. Well, let's finish up with our last slide or two where we'll show you what's coming up. So if we went too fast and all, we do have a YouTube channel. We're trying to build that out a little bit. I see people have been looking at it, so keep it up. And again, you don't have to be a BI member, but this should be up there in a couple days, and you can look at some of the stuff from before. In this, the blue underline, that's a hyperlink. So in the handouts, you can go straight to that location. Next slide. Again, we're a learn by doing. So just get in there and start doing it. The Maryland chapter has their class coming up. I may have the wrong date there. See, April 16th. I think we have to double check on that. Brian, if you can put in there when the correct date, if I have that wrong.
That is correct.
Oh, good.
It's a Saturday.
Good. Okay. Well, I have my dates mixed up on my own club meeting, and so there. But anyway, again, share this with any other non-BI members. We can always love to be able to grow and take a look at things going forward. And the only way you're going to learn by doing this is by doing SSGs. Let's go to our next slide. Again, there are all the email addresses for all of us. So again, we don't have the SSGs up there. If you send an email, any of us can send you all 4 of the PDFs with the completed SSG judgments, so you can be able to look at that and take a look. And then down below are the contacts for all the model clubs, so you can reach out to them if you have any additional information. And Armida is also the contact for her club that was featured tonight. Let's go to our next slide. And so next month, we're going to be looking at Alphabet, H&R Block, Intel, and Expeditors. So come join us on Monday, May 2nd, and we look forward to it. But other than that, thank you much. Anyone want to give a closing thought?
I'd like to give a closing thought, Kevin. One other thing that the chapter is offering, and this is a shout out to all the club members out there, that if a director comes and visits your club and does a presentation or shows you something new on the BI website or whatever your club needs might be, then we can offer you some additional perks for doing so. And just please reach out to myself or to Anna, and I'll go back to the slides there. Being the presidents of the chapters, contact us and we can arrange that for you.
Very, very good. Thank you. Well, with that, thank you very much. Good night, all. Enjoy your evening.
Thanks, everybody. Great meeting. Good night.
Always good to have you, Lola.
Thanks, Kevin.
Thanks, everyone.
Enjoy the
Night.
rest of your vacation, Armida.
Thank you.
She will.
Good night.
You're so wrong.